Cloudcast Media.
Drew Schlosberg Spotlight on the Community Show, amplifying the voices of social impact organizations, entrepreneurs, local nonprofits, and other community champions who shape the culture, creativity, and connectivity of San Diego. Brought to you by Mission Fed Credit Union, bringing good things to San Diego for over 60 years. Learn more about what is good for you and good for all by visiting www.missionfed.com.
I'm Drew Schlosberg of Cloudcast Media. A good day when our friend, he is a frequent guest on the show. He gives amazing financial advice, and that is Doug Wright, the CFO for Mission Fed Credit Union. How you doing there, Doug?
I'm doing well. Happy New Year.
Happy New Year to you, joined by my phenomenal, inimitable, talented co-host, Kristen Fogel. She is the executive director of San Diego Writers, Inc., be celebrating their 20th anniversary this year.
We are. Thank you. Thank you for all those positive adjectives. I appreciate it.
Yeah, no, you do a great job. And listen, it ties so beautifully into a lot of the guests we have here, and be remiss if we didn't give a big high five to Doug Wright, who has been named the next president and CEO of Mission Fed Credit Union March 1, as Deborah Schwartz just did a spectacular job in her reign. We'll be doing a lot more fun stuff, she said, when I saw her in the lobby. And not that
but you will be too, you know?
I think that's true. Yeah. I have huge shoes to fill, though. She's done, as you said, a spectacular job, and will continue to be very much involved in San Diego and helping the community out.
Listen, we've worked with Doug for quite a while, and Doug is a true community leader. He's been involved in a variety of nonprofits, and we both share our passion for the San Diego Council on Literacy on one of those. Thank you for your long-time work on that. So you have a question for Doug out of the gate?
I do. We shout Mission Fed's praises pretty constantly, but can you tell us Mission Fed's mission?
Mission Fed's mission really is to boost the financial wellness and financial success of our members. And in doing so, we would love to have all of San Diego as members, and we really want to boost the financial soundness and health and wellness of all of San Diego. We're open to the whole community and really want to emphasize and help people do better financially, because if they do better financially, life tends to go very well or much better than if you don't do well financially. So that's really our core mission.
How many members do you folks have now? How many members?
We have over 300,000 members.
Excellent.
And growing every year?
Growing every year.
Oh, my goodness. Yeah. That's, well, obviously there's a reason why it's growing. There's great service and the products you offer. And, one of the things before, Kristen gets into the question on the general market update, that you guys offer so many things at no cost, whether you're a member or not. You offer a bunch of seminars, do you not?
Yeah, absolutely. We are working with partners and doing seminars directly for community members. We work with a lot of really great nonprofits who, provide opportunities for us to get out and in the community and working with community members to emphasize financial education, learn about basic budgeting, learning about savings, learning about building credit, learning about retirement savings. You name it. If it involves your financial life, we're involved in providing education in that regard. We work very closely with people or nonprofits like Junior Achievement, which is a really great resource for the youths of our community, and have had a long-term partnership with Junior Achievement. So that's just one example of a strong partnership where we're educating San Diego youth on doing better financially.
Yeah, absolutely. Kristen?
Yeah, let's get into that general market update, if you will.
Oh, sure. Yeah, we've had an interesting and exciting new year.
Yes.
The last couple of days, a lot of news coming out. I think generally what I'd say is that things are looking better for 2024 than a lot of people originally anticipated in terms of the economic news. I think we all have to be aware of all of the potentially unexpected events that we've seen over the last few years and future unexpected events to create challenges for us. But in general, I think the economy has settled down. I think we're looking at probably avoiding a recession, which if you were watching news all of 2023, there was a pretty strong expectation that we'd have a recession sometime in 2023 or 2024. I think that concern over a recession in 2024 is lessened considerably, which means that things are going to grow and do a little bit better for the U.S. economy and therefore the San Diego economy as well. Unemployment continues to be at all-time kind of record lows. The unemployment rate, our print came out today, and we grew about 200,000 jobs in December, which is not a stellar pace, but a nice, reasonable growth rate. And the unemployment rate was about 3.7% nationally, which is very low, well below what we've seen historically. So that's good news for people who are looking for jobs or who have a stable and solid job. Certainly that helps underpin all of the economic activity and everything we do. The other good news front, which was more of a challenge in 2023, is that inflation has subsided considerably.
Right.
If you'll remember back in mid-2022, we peaked at around 9% inflation. If you look at the consumer price index, towards the end of 2023, we were down to about 3%, which is still probably a little bit higher than what we'd like. We'd like to see it around 2%, or at least the Fed would like to see it around 2%, but it's substantially lower than the 9%, and it looks like it's going to continue to trend down in 2024. So that's good news. The more challenging news, particularly for a lot of our members and a lot of San Diego community members, is that inflation is down from 9% to 3%. That means that prices are still growing at a 3% clip. And prior to that decrease in inflation, we had really substantial increases in prices, and those prices are not coming down. So people are still paying more, and I think we're all aware that we're still paying more for goods and services than we were, say, 3 years ago. And that's challenging, a lot of people's kind of monthly budgets. So it's better than it was, kind of the forecast is better than it was, and we're doing better, but we still are trying to absorb all of those price increases that we were faced with over the last 2 or 3 years.
Yeah, we're chatting with Doug Wright. He's the CFO for Mission Fed Credit Union. I'm Drew Schlosberg. As you're listening to another edition of Drew Schlosberg Spotlight on the Community Show. We are the nation's longest-running community podcast, now in our 18th year, and brought to you by folks like Doug and Mission Fed Credit Union, who've been doing wonderful things for our region for more than 6 decades, joined by my co-host, Kristen Vogel, Executive Director of San Diego Writers, Inc., which ties so beautifully into what you were just talking about. And that is, yes, it's a little bit of a tough nut for us. We have to tighten belts, which is why people have budgets. You've talked about this quite a bit and try to stick to budgets in this aspect of it. And, that's why when there's a little bit of a uptick in what it costs to do X, Y, and Z, you've got a little flexibility in there. We'll get to budgets maybe a little bit later in the second half of the show. But you and I have been talking about this, it seems like, for a while. You don't hear as much recession talk, do you?
No, I think we had a lot of recession talk in 2022 and through most of 2023. That's somewhat lessened at this point in time because I think the economy has done better than almost anyone anticipated.
Right.
And managed to, at least up to this point, manage to lead towards that soft landing that everyone was hoping for. So we'll see if that continues in 2024. I think the chances of a recession are lower than they were, basically primarily because we still continue to have a really strong labor market out there.
Right, exactly. And, talk about how important, community, your consumer confidence is to people with their own individual budgets or spending in general.
Yeah, consumer confidence is critical. The U.S. economy is about 70% made up of consumer spending. So whatever the consumer does and however the consumer is feeling and whatever they want to do in terms of spending is what drives the U.S. economy. So if consumers are confident and they continue to spend, then that's good news generally for the U.S. economy in terms of overall growth rates and unemployment and those types of things. What's interesting, I guess, about consumer confidence is that because of all the recession talk and because of probably primarily media really focusing on the recession talk, consumer confidence was relatively low through most of 2023. It did pick up towards the end of 2023, but the consumer confidence surveys were not aligned with what people were actually doing. People were actually continuing to spend. They were continuing to travel. They were continuing to go to restaurants. They were continuing to buy goods and goods at a little slower pace, but they were continuing to spend money, even though they said they weren't all that confident in the economy at that point in time. Last couple of months of last year, consumer confidence started picking up again.
How much of that, I know Kristen's going to want to ask a question on interest rates in a few seconds here, but how much of that's a paradox, of course, and, I'm not trying to get political here, but you hear that, maybe from one side of the aisle that the economy stinks and all that business, but the numbers don't sit there and align with that, do they?
No, you're correct. Yeah, I think if you're talking about interest rates in particular, interest rates are a paradox.
Yeah.
Higher interest rates help some people and higher interest rates hurt some people. So if you are a consumer who managed to buy a car or managed to buy a home or managed to refinance a home in 2020, 2021, when rates were at an all-time low, then you are sitting on a very low interest rate.
That's right.
And that's adding to your ability to spend.
That's right.
Because you have more money that's not going out to mortgages, a mortgage payment or a car payment or something.
Right.
If you are trying to buy a car or buy a home at this point in time and you're facing 7% interest rates instead of 3%, it's a much tougher issue for you. So the people who are now trying to buy cars and homes and those types of things are being challenged by affordability that the people who had done that earlier are not. The other benefit, I guess, or the other people benefiting from higher interest rates are all our savers out there. All of the people who unfortunately had to get used to 0% on their savings for the period from 2010 through about 2021, 2022 are now getting, anywhere between 3 and 5% in terms of where they are saving their money, and so those people are seeing benefits from having money saved, and that's a positive. And they're able to either reinvest that and continue to build their net worth, or they're able to spend some of that and continue kind of growing the U.S. economy. We
come back from break. We're going to chat more with Doug Wright. He's the CFO for Mission Fed Credit Union, chatting about general market update, interest rates, and projections moving forward. I'm Drew Schlosberg, as you're listening to another edition of Drew Schlosberg Spotlight on the Community Show, the nation's longest-running community podcast. We're now in our 18th year, brought to you by Mission Fed Credit Union for more than 6 decades, just doing great things in our region, joined by my co-host, Kristen Fogel. She's the Executive Director of San Diego Writers, Inc. We will be right back.
When you do your banking with Mission Fed, you get great rates on auto and home loans. That's good for you, but something good also happens for a lot of other people. We're not for profit, so we put money back into the community to help lots of great nonprofits to keep San Diego strong. So you're not just getting something good, you're doing something good. Come to Mission Fed. It's banking that's good for all.
Brand amplification is the DNA of Cloudcast Media, and our code is the powerful blending of sound, voice, and storytelling to lift local brands and their communities. Whether it is our Brandcast, Schoolcast, or Causecast platforms, the unifying ethos is all about this community, the one you call home. If you dare to dream and want to explore the brand amplification of Cloudcast, a national leader in local podcasting and other Winfluence strategies, please visit us at cloudcast.us.
I'm Drew Schlosberg of Cloudcast Media. You're listening to another edition of Drew Schlosberg Spotlight on the Community Show, the nation's longest-running community podcast. We're now in our 18th year, brought to you by Mission Fed Credit Union. Definitely doing great things for San Diegans for more than 6 decades. Chatting with CFO of Mission Fed Credit Union, Doug Wright, and I'm joined by my co-host, Kristen Fogel, Executive Director of San Diego Writers, Inc., who has interest rate questions or whatever for Doug.
I just have questions in general. I'm excited my interest rate is so low, but that is beside the point. Obviously you were just a wealth of knowledge. And so I'm curious, before Mission Fed, you've been here around 7-ish years. What did you do back then? Where did all this knowledge and know-how come from? So I'm just curious a little bit about your history.
Well, I've been actually in the banking industry for about 35 years now. So straight out of college, I was an accidental banker, I guess. So I graduated from college, didn't have a job, needed a job because my folks said, you are on your own. So I threw out applications to a variety of different places. And the first one that came back that looked interesting was at a bank. So
which bank?
This was in Idaho. It was Idaho First National Bank at that point in time. So just started in that position and grew up through the banking community, and then made the switch over to credit unions about 8 years ago with moving over to Mission Fed, and it's been a wonderful move for me. I really enjoyed it.
Yeah, well, it's so nice to get back. I'm going to jump on what a little bit what Kristen was talking about, and you as well, with mortgage rates and so forth. We all know that San Diego has some housing challenges. That would be the greatest understatement in the history of humankind, I think, in that aspect of it. And housing prices continue to grow. Now, part of that is the fact that there is no inventory. And so people don't want to get rid of their homes, possibly because they don't want to go get an interest rate of 7% when they've been paying 3%, maybe part of that, or they have nowhere else to go, or who knows where that's going to go on this. But that being said, people tend to forget, this I guess shows my age over here, wasn't phenomenally long ago when interest rates were 18% for the homes, correct?
That's correct. Back in the early 80s, mortgage rates were in the 16 to 18%.
Exactly. And people go, what are you talking about? I go, oh, no, they were. And 7% basically, that's, it's an eye of the beholder and what you have and all that. That's not a horrible interest rate, it depends what your income is and all that business, Well, seriously, think about it. Well, Doug and I have had this conversation before that, and it really depends. You have to look at your budgets, and there's nothing more important his age-old thing. If you make X, don't spend more than X, right? Okay, you got to save some out there. But that being said, I always marvel when someone goes, oh my God, the interest rate just went up 1/4 point. I can't buy this home. You mean you can't buy the home because it's an extra $20 a month for 30 years or whatever the damn number is in that aspect of it? Talk a bit about that aspect, the psychology of rates going up when it probably doesn't affect you as much as you think.
So I think, you have to place interest rates in historical context. When you were talking about those 16 to 18% interest rates, you were talking about home prices that were on average, $100,000 or $100,000 or less.
Right.
So it's, kind of the price and the interest rate are the two things that combine to create, what your payment is going to be and how you can afford that payment. So when you see a change from 2% interest rate to 7% interest rate in a very short period of time, that's going to impact affordability, particularly if home prices don't adjust down to that level.
Right.
In the past, when you've seen changes in interest rates, you've also seen home prices adjust or moderate to offset some of that. So the increase in your payment as a result of interest is offset by having to spend less to buy the house. That hasn't been the case in this particular market for some of the reasons you mentioned. Number one, because people are sitting on that low interest rate.
That's right.
So they're not going to move. Number two, particularly in San Diego, we've chronically been underhoused. So we still, even if that weren't the case, we have a shortage of housing available for people to buy. So that's, created a challenge in terms of the supply side, and that's kept home prices up as well. And so when you combine those two things, you have a situation, even though historically 7% interest rates are not that high, you have a situation when combined with home prices that it's a real affordability challenge for a lot of San Diegans. And so that's something that is not going to be addressed overnight. I think the market, let's assume that the Fed is stable or drops a little bit, the market will ultimately adjust to some respect to a 7% interest rate.
Right.
And that will create more activity as time goes on. But I don't think that solves the underlying problem of not having enough housing stock in San Diego to support the demand. So San Diego, I think, is going to be challenged and has been challenged before all of this has happened in the last couple of years. San Diego has been challenged with affordable housing for many, many years, and that's not going to go away anytime soon.
Right. So is the question there? Okay, here's this house. Yes, it's a math issue. Here's what it's going to cost you to buy this, $1.2 million house, which could be, a 100 square foot cottage in, I'm being a little facetious on this aspect of it at 7%. Just do the math. Well, no, I'm not bringing that in. So unless I want to go down the road of bankruptcy, I better not do that. Or I can do it. I'll be squeezed a little bit, but you know what? These prices are probably not going to go, the home prices, down. Okay, they're probably going to continue. What are we? The second highest growth rate next to what was it? Was it Cleveland? No, was it Cleveland?
I think it's Cleveland or Detroit or one of the upper Midwest cities.
It was Detroit in the country again. So again, this is where you talk to somebody at Mission Fed Credit Union or talking to someone to say, do I have the resources to make this happen? Correct?
Yep.
And do you guys do workups for people on that to say?
Absolutely. We'll help people. I think the road to homeownership for a lot of particularly first-time home buyers in the San Diego market is to start with a condo or something relatively small and start with something that is a little bit more affordable and then use, that purchase and you build up some equity in that purchase so that you can trade up to a single family home or something like that. So I think that's probably the path for particularly younger first-time home buyers that seems to be most successful unless you either are independently wealthy or have parents or other people who are going to help you with a substantial down payment. Because one of the things with San Diego, people and wages and those types of things over time will adjust to a higher interest rate. So wages will catch up with a higher interest rate and those types of things. One of the big challenges for San Diego, because homes are so expensive, is the down payment. You've got to come up with a down payment. And there are programs that we have, particularly for first-time home buyers, that can minimize that down payment requirement. But there is still some requirement. So you've got to save for that down payment. And that's one of the reasons why a lot of people look for the condo purchase or the smaller single-family home purchase or something like that first so that they can get into a home, start making payments, build some equity, and then be able to trade up going forward.
Right, exactly. Your mind is spinning. I can just see it right now.
I'm just, coming from the millennial standpoint and someone who's purchased things and real estate wise, it's much harder for my generation. So I just want to shout out my generation right here. But I think I love that there are so many programs that you have. Because a lot of us are grappling and we need more knowledge and we need to put together solid plans. Otherwise, no one is going to be able to traverse into the market,
Yeah, you're right. So it definitely takes more planning. It's a longer term approach to be able to buy a home in a place like San Diego with the current, affordability issues. But there are ways to get it done, and there are programs to help you. There are a number of first-time home buyer or low and moderate income home buyer programs that can help individuals and families get into a home.
Yeah. Right. Is there anything for youth also? My husband and I talk a lot about why didn't they teach compounding interest in schools, that would have helped people out a lot. So, how young does your programming go? Or what resources do you have for kind of, kids or anything like that?
Yeah, we really start at a very young age. We have programming available both directly and through our partners for people as young as age 3.
Awesome.
And then going up and getting more advanced as you get to be. But that's one of the real challenges in the U.S. in general is that we just don't spend enough time working with our youth on financial education.
Right.
And there are a lot of resources in the community. The challenge is it's not mandatory. Some of the states have made at least some kind of financial education course mandatory and a part of the regular school system. In California, that's not the case.
Oh.
So we have to supplement, we as a credit union involved and very much engaged in trying to teach youth, good financial skills, and all of our nonprofits like Junior Achievement trying very hard to do the same thing, but we have to engage it on almost a voluntary basis. And that's much harder to get, distributed out to all of our youth than if you make it a part of the regular school curriculum.
Well, I can answer that question because I was working for San Diego Unified when they decided to get rid of consumer math, which did exactly what you talked about.
Okay.
Because it wasn't high end enough, it wasn't challenging enough. So they put in things like algebra and all that business.
That I use every day.
Yeah. Well, the thing, listen, again, my math friends hate me for saying all this stuff here. There was certainly a reason why you have algebra and all that business. Sure. Tops into decision making and drawing conclusions and all that.
Yeah.
However, when you, to your point, Kristen, and I've said this all the time, I get the heebie-jeebies when I mention the word algebra and geometry because I stink at that stuff.
Me too.
Very good at numbers just because I'm being a former sports writer. But consumer math was the class that taught everything you're talking about.
Yeah.
Interest rates, what's a mortgage, how do I deal with X, Y, and Z that you're going to be with between now and the time you're not on this earth. Algebra, if you're not into the architecture or building homes and all that business, I haven't used algebra, and I'm not saying you shouldn't learn it, but consumer math is so critical, in that area. And I think getting back to what Doug is talking about, reach out to Mission Fed. Is there a number to call if the people are interested? Hey, I heard this podcast. I definitely think I need to learn about this, or I need my kids to learn about it. How do they get a hold of you guys?
Yeah, I think the easiest way to figure out where to go is to either go into one of our branches or go to our website, www.missionfed.com.
Right.
And, there are contact resources there. There's financial education resources directly on our website. And certainly we're available either by phone or in our branches in person or through the website to be able to help people in achieving their financial goals, whether that's buying a new home or whether that's buying a new car or saving for retirement or
college,
just learn, or college, or just learning how to do basic budgeting.
Right.
Whatever you're interested or challenged with from a financial perspective, we can help.
No, that's great. And, just to sort of put a bow on this, you're relatively optimistic of where 2024 will go financially?
Yeah, I am actually. And I tend to be, from an economics perspective, probably more of a natural pessimist.
Okay, that's good.
You're an accounting guy. You have to start there, and then you can inch into the positive, right?
I'm happy that you're happy then, if that's the stance you usually take.
Well,
CFOs are cautionary.
Yeah.
The term I use is measured. They are very measured in more than one way. As usual, great content. We really appreciate you doing this. Give some thought for our listeners to really think about this X, Y, and Z. Certainly can reach out if they want to hear more about what your guys' thoughts are on this. And it's very, very helpful because most of us aren't financial experts, to say the least. This is very encouraging. For where things are going, right? Interest rates probably going to be, going down a little bit over here. Unemployment stays strong in that aspect of it. So that's a good feeling to start off in January. Yeah, absolutely. Any final comments you have, Kristen?
No, I just appreciate everything Mission Fed does for the community. I want to check out some of these programs for my son, for myself. So just thanks for all the good work that you do.
Oh, absolutely. Happy to do it. And whatever we can do to help San Diego grow and do better is what we're really all about.
Absolutely. Do you have any final comments, Doug?
No, just reach out to us if we can help in any way. We appreciate the opportunity to discuss economics and market conditions and how we can help. And we're always there for people.
Absolutely. We've been chatting with Doug Wright. He's the CFO, soon to be president and CEO of Mission Fed Credit Union. I'm Drew Schlosberg. You've been listening to another edition of Drew Schlosberg Spotlight on the Community Show, the nation's longest running community podcast. We're now in our 18th year, brought to you by Mission Fed, continuing to raise the bar for so many wonderful folks in San Diego County for more than 6 decades. Thank you so much, Kristen Fogel, for being a great co-host, and we hope our listeners enjoyed the show.
You've been listening to an episode of Drew Schlosberg's Spotlight on the Community Show, amplifying the voices of social impact organizations, entrepreneurs, local nonprofits, and other community champions who shape the culture, creativity, and connectivity of San Diego community. Brought to you by Mission Fed Credit Union, bringing good things to San Diego for over 60 years. Learn more about what is good for you and good for all by visiting www.missionfed.com.
Cloudcast Media.